Welcome to another exciting episode of Max Homes Real Estate.
Wow. Okay.
We are
So
back.
Max, how's it going? You're back.
Going great. Summer in full swing. Barbecues, picnics, Olympics just wrapped up.
Yeah. Right.
Canada, got some medals, gold.
Mhm.
US is
Yeah.
always on the top, followed by China. Hopefully we catch up.
Right.
Then what? US election is in full swing.
Mhm.
Kamala and Jim is working. It's going to be a tough election with Trump and JD Vance. So it's something that let's see what's going to happen. That will
Yeah.
keep us on toes. Whatever happens in the US, Canada does have an impact, whether it's political, whether it's economical.
That's right. That's right.
Yes. So
Yeah.
a lot of changes happening in the marketplace. Yeah.
What's going on with real estate? Any changes?
Yes, exactly how we
Yeah.
predicted in our previous videos. We got a 25 basis points cut based on the data that we've been tracking.
Yep.
So that's a great news, especially people holding variable mortgages. Any rate cut is a relief for them. So that's
right.
a good thing. And then, we are tracking data. We'll deep dive into our section where we are tracking the data for our next announcement from Bank of Canada. It's in September 5th.
Right.
So,
So with
yeah.
no more wait, I think we can get started with our usual session, which is news and headlines for the last 2
Absolutely.
weeks.
Yeah.
Yeah.
So as usual, we'll cover the major news and headlines in the section 1, followed by TRREB's July data as a release. We'll review that real quick.
Yep.
And then also in our next video, we'll cover the GTA data that we are tracking on a weekly basis, and also the mortgage rate changes. So a lot of bliss, lot of good news actually to be covered. So without further ado, let's deep dive.
Sure.
Let me share my screen. Okay.
So hopefully we have some good news, which will positively impact our real estate market in GTA.
Yep.
Yeah.
So one of the major news we want to cover is about our unemployment data, labor market. So basically, unemployment rate for July came out. It is holding steady at 6.4. Actually, we were estimating to add jobs. However, it didn't happen, which is a good data point or good news from a rate cut perspective.
Right.
So unemployment is pretty much holding at 6.4. Now, with respect to inflation print, we don't have the inflation print for July yet. It will be released on August 20th. Hopefully, we don't know if the inflation is still under control, under 3. Currently, it's at 2.7. Those two data points align for possibly another rate cut in September.
Okay, that's good. Good news for mortgage rate, but it's a weakness. It's exposing the weakness in the market, in the labor market here,
Yes.
right?
Yeah.
Yeah. Let's see, how they are gonna. How Bank of Canada gonna control this. It will be interesting. Okay, so the next one is again about the mortgage rates, right?
Yeah.
Yeah.
So hopefully we get more rates.
So economists are predicting more rate cuts. That's obviously in July. I think 90% of market is going with another rate cut in September.
Yeah. So another thing is about the Fed. The US Fed has not cut any rates, but hopefully they are inching towards cutting rates soon, which will be good for Bank of Canada, because only if they cut the rate, it will help us also to cut the rates. That way, the Canadian dollar doesn't depreciate too much compared to US.
Okay. Yeah. So Yep. So they changed the tone, right? Feds.
Yeah.
Yeah. Okay. So let's see if they're gonna do a rate cut in September. That is what market is expecting right now.
Right. And also the bond market has not been doing well, right? So
Yeah,
uh,
that's
want to
right.
talk a bit about that?
Yeah, yeah. So the actually, after this, Fed, changed their tone, and also the employment data came in US, which was not really great, and that's why the market got crashed last week. But that also impacted the bond deals as well. So bond deals, the US 10-year bond deals came down, and even the Canadian bond deals also came down, which is actually which will affect the fixed rates of Canadian market. So we are anticipating some changes in the fixed rates soon, and I think in our today's sprint also, we are seeing some impact on that.
Right.
So we'll cover that, but let's see. We'll continue to track and see where the mortgages are going.
Right.
Yeah. So what's the next one, Max? Anything
Next one
else?
is, we are in August now. So one of the federal legislation that passed was about 30-year amortization starting August 1st.
Right.
So basically, if you're buying a new home or a refinance too, instead of 25, you can opt for 30 years amortization. So what that basically amortization is, your nothing but it's a time period by which you're gonna pay off your mortgage. So what that means, more higher amortization means in lower monthly payments. So
Right.
folks who want to qualify for a higher mortgage, they can because their monthly rate will be less. So um, yeah, it has like anything, it has pros and cons. Basically,
Mhm.
if it's more amortization, you'll be paying more interest, across the life of the loan.
Right.
But then, your monthly payments will be less. That means more, cash flow you have, or more, liquidity you have, or you can buy a property you can qualify for a higher mortgage for a property.
Right. Yeah. Just to clarify, this is only for the first-time home buyer purchasing a new home, right?
Right. Yeah.
Yeah. Not for the refinance. Yeah.
Yeah.
Okay. Okay. Yeah. So yeah. Yeah. So you are not expecting much, impact or significant change in the market just because of this change.
Right. Yeah. I mean, there has been a lot of there has been you know there has been there have been a lot of negative with the interest rate going up. There has been a lot of negative news, like folks are losing their home. They couldn't close on the property that they wanted to close because interest rate went up. So a
Yep.
lot of people lost money. Even a lot of homeowners are delinquent on making their mortgage payments.
Right.
So there's a lot of fear in the marketplace, especially to buy a new property, whether they can qualify or what's going to happen. So it will take some time for the buyers to have that confidence, and then that's why even though there is 50 basis points reduce, there is no significant change in the marketplace. But if once we start getting around 100 basis points, there should be some significant uptick in the market. As of now,
Okay.
we'll deep dive into the data,
Mhm.
but significantly there's nothing much has changed.
Right. Okay. Okay. We'll see. That is our take, and let's see. How is the market is how is them reacting to this mortgage rule changes. Okay. So I think we can go to the next session. I think we are gonna track. I mean, we're gonna show the TRREB market data for July. Yeah. Okay.
Yes.
Sounds
So
good.
TRREB is a real estate board, Toronto real estate board, and basically the data for the last month has been released. So if you
Mhm.
compare, this is only for residential transaction that we are covering.
Yeah.
So if you look at the total transactions that happened year over year compared to July, there is actually a 3.3% increase in the number of transaction uh, uh, in the month of July.
Mhm.
So, and then again, the average selling price, if you look at it, even though there is a lot of inventory in the market compared to previous years, there's only a 0.9% reduction in the average selling price. So the prices are still holding up in spite of having a lot of inventory in the market.
Okay.
Um, and then if you come to the new listings, actually compared to July 2023, in July 2024, we have like 18.5% more of listings in the market.
Mm-hmm.
So, in the school, we say demand and supply. So when the supply increases, the demand should reduce and the price should come down. But we are not seeing that. It's only 0.19% reduction in spite of, almost 3,000 uh, additional inventory in the market. So it's something that to, to point out.
Mm-hmm.
Now, if you look the sales to new listing ratio, basically you see that in the month of July it's 33%. So that means we are in a buyer's market, GT as a whole. So if sales to new listing ratio is under 40%, typically it's buyers. 40 to 60, it's balanced, and north of 60%, it's sellers market.
Mm-hmm.
So GT as a whole, we are in a buyer's market. However, there are pockets in local market. There are pockets where it's either sellers market, it's balanced, or it could be buyers. So it depends upon the area.
Okay. Okay.
Compared to last year, basically, sales to new listings came down. It's negative 5%, July 2024.
Okay. So yeah, that is pretty much aligning with our data. The only change is here is that TRREB, they are showing I mean, they're publishing the data for all the listings that is made under the board. But we are here and in the weekly trends. Of course, if you see that the data that we are tracking is just for the GTA. I mean, for this some area that is being covered under GTA. So that we will show in the print, the GTA print as well. So Max, we are going to the next session. Are we gonna do it in the next video?
Yes. So
Yeah.
so yeah, so in the next video, in this video, we basically, in the next video, we'll cover the weekly GTA market trends that we have been tracking, and
Yeah.
also the mortgage rate changes. So, uh, see you in our next video.
Yeah. Don't miss it out.
Yes.